Hi everybody, welcome back. I'm Saul with MyFi Journey. It is Wednesday, June 30th, 2021, and I am looking to be financially independent by December of 2026. And since today is the end of the month, in today's video, we're going to go over and review how my portfolio performed for the last month. So let's get to it. I'm going to need you to come in on Saturday. Show me the money. And welcome back to MyFi Journey. We are looking at the performance for the month of June. Now, keep in mind that in June, the Fed gave out the news that in 2023, they are looking at potentially increasing the interest rate. So we had a pretty big drop about two and a half weeks ago in the stock market, and it's slowly coming back up. So that is going to affect some of the numbers that you're going to be seeing in this video. Also keep in mind the 7 investments that you see on the screen is not the totality of my account, but this is where the majority of the money is currently allocated. It accounts for about 98.5% of the total amount that I have invested. And you'll see the percentage wise right now and how it compared from the last time we looked at my portfolio. So anything that you see in blue under weight percentage current, it basically signifies that the amount of money allocated increased compared to last month. Anything in red means the current amount of money allocated to it decreased. Now, this is typically because of the price fluctuation from the investment. So for example, CLM increased in price, therefore it is now there's more money in that investment. So that's why it went from 16.2 to 16.59%. And then counterwise, Orchid Island Capital, it used to be 15.64%, but the price decreased and now it's standing at 14.69%. Overall, though, if you look at the percentage at the bottom, last month, this investments accounted for 97.8% of the total allocation. And this month they went to 97.85. And this is primarily because I continue to invest in RYLD, which is the Global X Russell 2000 cover called ETF, which basically looks at the Russell 500 index. So that one went from 9.5% to 9.87%. That was a combination of the price increasing slightly and me just dumping in dividends into that investment account. So the dividend yield is typically going to behave opposite to the weight percentage. Since basically as prices of the investments increase and the dividends remain the same, it is expected that the dividend yield will drop. So it's pretty much going to be a 1-to-1 ratio here, where if you see that the current weight increased, I'm not putting any more money into anything other than RYLD. So anything that you see in blue for weight percentage, you're typically going to see a red on the dividend yield, and vice versa. Anything red that you see in the current weight, you're typically going to see a dividend yield increase, primarily again because as prices fluctuate and the dividend payment remains the same, then the opposite will occur with the dividend yield. There was one significant change or happening this month where QYLD actually dropped their dividends. I can't remember the exact amount, but you can tell, as far as the weight percentage, it just increased by less than 0.5%. This is because it increased in price a little bit, but if you notice, the dividend yield dropped more than 1.5%. So that was a big discrepancy there between how much it increased in value versus how much it decreased in dividend yield. That's because, again, QYLD did drop their dividends for the month of June slightly, but it was still a significant change. Overall, though, it didn't really affect the dividend yield as much. Last month we were sitting at 11.43%. This month we are at 11.4% overall. Still pretty good. If you've seen the video about how much you need to generate $100 per month, my money market is paying 0.03% in interest. So 11.4 is really good any given day. And then finally, the appreciation. And this is basically the change in price from my cost basis or purchase price compared to the current price. And again, anything in blue indicates that we are gaining appreciation compared to last month. And anything in red, basically it means that it dropped appreciation. And as you can see here, currently CLM is still my biggest loser as far as price appreciation, but it's still my biggest dividend payer based on the dividend yield. We are moving in the right direction. The price of CLM did start to go back up. It's still, I'm still down 11 or 13.26%, from the moment that I purchased it to now, it's dropped 13.26%. Overall, though, if you see all the way at the bottom, MLPA and STWD, those are my two biggest winners. And those are the ones that are basically keeping me positive for this year, even though we did drop compared to last month. Last month, the total appreciation was 7.53%. Again, with the Fed news of potentially increasing interest rates in 2023, everything went down, took a dive about two and a half weeks ago, and it's slowly coming back up. So right now, overall, I am at 5.37% appreciation, meaning if I were to sell everything right now, which I am not planning on doing, but if I were to do so, I would be up 5.37% of capital appreciation. I hope this is useful. Again, this is not a complete list of my investments. No, am I suggesting to anybody to invest in this particular investments. As always, I am not a financial advisor. This is for entertainment purposes only, so please make sure you consult a professional before you take into any investments. Let me know what you think. If you found this useful or informational, please let me know. Leave me a comment, give it a thumbs up, and as always, don't forget to subscribe so that anytime I post any new video, you get alerted and you don't miss out on the new information. Hope this was useful for everybody, and until next time.